Welcome, and thank you all for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. In this show, we cover a broad range of topics that cater to CRE newcomers and industry leaders alike. I'm Shanti Ryle, Director of Content Marketing here at Crexi, and today we are thrilled to sit down with Nick Jones, founder and CEO of Alakai Capital. A little bit about our guest. Nick Jones has been involved in commercial real estate management, investment, development, and brokerage for over 20 years. Each industry role has added perspective, introducing various angles and strategies to evaluate each opportunity Alakai Capital pursues. Currently, he is CEO while managing acquisitions, development, and capital markets. During his career, he has underwritten and purchased over 70 commercial investments and/or developments, representing over $250 million in value. He currently oversees 800,000 square feet of industrial, retail, office, and medical office. Nick graduated summa cum laude from the University of Central Florida while concurrently participating on the world tour as a professional wakeboarder. We'll be getting into that. Making podium at Worlds in 2011. He is an active member of ULI, ICSC, and NIOP. Nick, welcome to the podcast.
Thank you, Shanti. I'm excited to be here.
Yeah, we're so excited to have you. You've had quite the journey so far in your 20 years and more of commercial real estate, and then wakeboarding before that. So really excited to get into it.
I am too. It's definitely adding up now.
Oh, yeah. Yeah, I feel that too on my end. So I know I just covered your bio, but I'd love to, to start us off, get us a little bit more into your background in your own words. So I got to ask, how does a professional wakeboarder end up as the CEO of a commercial real estate investment firm?
Yeah, absolutely.
Where did that come from?
There's actually more correlations than you'd think between, entrepreneurship and business ownership and athletics. So for my story, it was, my family had some background in real estate. I had them, my father and grandfather passed away when I was young, so I didn't really kind of have that, through my childhood as much. But my professor at UCF, which is where I went to school, his son was a pro surfer. And because of that correlation, he saw that I was a pro wakeboarder. And so I started, hanging out with him more, hanging out with his son. And he just really made real estate seem like a fun business to be in. And luckily, he was accurate. It has been a really blast to be a part of. That it kind of, started getting me more focused on it. And I think the biggest thing then led me through that was when you're an athlete, you kind of learn at a young age how to commit to hard work. And the reason for that, I think, is, when you're younger, you're an athlete and you have the chance to win at something and kind of taste that success, it's really addicting. And most people, tend to not get that until maybe later in life. And so, when you're constantly kind of working hard, year after year, and then you start to kind of see some success. And, for me in wakeboarding, it was making a few of the podiums, starting to travel the world. It kind of ingrains in you that, geez, this hard work stuff actually pays off. And so when I went into real estate, there were, 10 years of hard work, after work, continuing to work late at night. But because I'd tasted that before, I knew that someday I'd get back to that point. And so I think that was the big motivator that got me to, where I was able to start my own business, grow my own business, and get it to where it is today, where, I've had a certain level of success.
Totally. Yeah, I'm curious for you. You said that your father and grandfather had some experience in commercial real estate, and then you came back to it when you got to university. What was the moment for you that made you go, I'm gonna jump back in? This is where did you see the parallels between professional sports and this business, and what was the final clincher that made you go, okay, this is for me?
Yeah, so I remember when I was young, my father and grandfather, they built a few industrial buildings, and they had a retail building as well. And my dad would come home at night. We'd always have family dinners. And so we'd sit around the dinner table and he'd talk about, his day. And he was always meeting really fascinating people and had all these interesting stories about entrepreneurs doing, all these very unique businesses. And one stood out, which was at the time, I was probably like every other child my age, really into video games. And so Microsoft had asked him about one of his warehouses to do a Halo, which is a big video game,
Yes,
like
I know
video
Halo.
shooting there. Okay. And so I just remember thinking, man, that's really cool that he had exposure to that, but I didn't really know what it was. Then when I was in college and my professor, started taking interest in kind of helping me cultivate into real estate, I started to understand like the landlord tenant relationship more.
Hmm.
And it, became very apparent that in real estate, you can, know certain aspects of the business. And that just opens up a world of meeting pretty much every other type of entrepreneur,
Mm.
there could be.
Yeah.
So that really drew it to me because I like the idea of something like private equity, but it was just really challenging. There were a lot of variables. Where in real estate, you could just know how to manage and own properties, and you got to meet, people that were starting businesses, restaurateurs, manufacturing facilities, biotech companies. There's all these fascinating people that you can be involved with, which is kind of one of the best parts about real estate.
Hmm.
That all we have to do is just know how to, run the buildings. And so
Totally.
I think when I saw that I had that opportunity to meet all these people and really keep, business exciting, that was what drew me to it because I knew that, there was a high chance probably I'd never really get bored of it and it'd always be exciting.
Yeah, I was just at a conference last week, and the through line is that every single day in commercial real estate, it's something different. You're never going to
Yeah.
get bored because you're never going to have that predictability. It's always going to be new and exciting in some weird facet that you've never encountered before. So love that. I
Yeah.
love that you resonated with that variety. So starting out in commercial real estate, if I read correctly, you started in land brokerage after
I did,
college.
yes.
Uh, but you mentioned on our prep call that you realized, why buy the land if I can just buy the building? Explain this realization. When did it click for you, and how did that point of view shift affect where you decided to go from brokerage?
Yeah, so it was interesting. That was actually the feedback I got for the first 2 or 3 years of my career in brokerage
Mm.
from developers that I was calling. And when I got out of college, we were still in the recession, and Florida was hit really hard. And I jumped into land brokerage because it seemed like an exciting place to go, not really knowing that land was valued more than buildings next door. So I spent, probably 2 or 3 years cold calling people, and all these developers would continue to tell me, Nick, if I could buy this piece of property for less right next door that already has a building on it that I can renovate, why would I buy this land for you?
Mm.
And when you're fresh out of college, you're new, you're trying to get into an industry. It's really tough when people ask you those questions that don't really have answers. And so it kind of spawned an interest of saying, well, I mean, I don't know the answer to this, but maybe I need to start looking into it. And so I started to, study development and try to understand the way that they were looking at things as a broker. So then when we were having conversations, it wasn't that, I was this kind of naive, younger person in the industry that had no idea what they were looking for. It started to be where I understood the variables and the factors that, they wanted out of a site. And by the time I started to kind of pick up some momentum and start to speak their language a bit was when the market was turning. And so
Mm.
that was a really kind of nice aha moment where it felt like I was starting to speak a language that they understood and respected. And that just furthered my fuel of saying, well, geez, that's kind of the direction I want to go. Like, I like the problems that they're having. And so it kind of rolled more into the idea of trying to jump over from the brokerage to the development and investment side.
Yeah, you wanted a piece of the pie.
Yeah.
Totally. So, can you tell us the story of your first deal?
Yeah. So that probably the story of my first deal that matters most to me was the first project that I raised capital for.
Mm-hmm.
And that really feels like my first deal because the weight of, taking in other people's money is something that I still have on my shoulders to this day. And so it changes kind of the way you look at everything. Because I bought a deal before that I just saved up some money and me and my brokerage partner purchased, and we were able to flip and do pretty well. It was an old Taco Bell. Um, but very quickly I got to the point where if I wanted to continue to grow as an investor, I was going to run out of capital. And so I found this old Wells Fargo that a gentleman actually was listing in my brokerage office. And so I saw it and said, I think this would be a great, redevelopment play as an out parcel to a grocery store.
Mm.
So I put it under contract and was trying to figure out how to, put together the capital for it. Was asking people around me and figured out, okay, I'll try to raise money and do a syndication. And I'd read about this in books, for years. But then when you actually, start through the process, it's very different. It's very real.
Yeah.
And put together my investment thesis for it. I was actually with my family driving across the Norwegian countryside. I was on my
Wow.
cousin's graduation trip.
Very
And so, we're having a really good family time. And unfortunately, I had a due diligence period that, was coming to an end. And so my head was, somewhere else. But, put together this thesis of why I liked the project and, where I saw, the various ways that we could make money on it.
Mm-hmm.
And when I sent that out to people, it was a very exposing moment for me where, you're not really hiding behind anything. You're kind of saying like, here's why I like it. And I hope that you agree with me. You want to invest.
Yeah.
And I was shocked to see that pretty much everyone I sent it to was excited about it. They said, hey, we'll jump in with you. We want to, jump on this deal.
Yeah.
And so on that one, I raised all equity because I didn't want to risk having debt and, risk the deal going downhill. It ended up going a very different direction than I thought. It was one of our variables, but it's not my top one, which we repositioned the building. We had a tenant for it. Then we were able to refi out of that. And the money we took out of it, I was able to buy my second deal. And so with that equity from the first deal to buy the second deal, then with debt as well. So I was 50% loan to value on both deals because they were both about the same size.
Yeah.
It kind of instantaneously gave me a track record where then for my third deal, I already had multiple investors, and it really became this kind of snowball effect that I was able to take hold of and, continue to run with.
Totally. It's so interesting how, obviously you did your due diligence and you plainly just mathed out all the all the factors about why you like the deal, but ultimately it's about trust. So this group of investors that pooled their equity together with you and were excited by your thing, that ultimately boils down to who you are and trust, right? So I'm curious, this is a little bit more of a tangent question. Like, what do you think they saw in you to get you capital for that first couple of deals, besides just it being a good deal?
Yeah, it's something I think about quite often because, your reputation is something that people, throw around quite a bit and say how important it is.
Yeah.
And, a lot of it is the things that you say that you consciously do, but, I think more of it is the subconscious way that you act and you treat other people. And it's really over a lifetime. With those first deals, it wasn't a track record for me. It wasn't, expertise as much as it was these people knew the type of person I was. And just from years of knowing me. And those first few deals, you're talking to friends, you're talking to friends' parents, you're talking to anyone that'll listen
investors.
to you. Exactly. And so they've really built this like persona of you in their head that it's really hard to, fabricate or make up. And if you keep that thought process all the way through your career, I think that really holds well because people are generally pretty smart at judging character. And most of, my investors even today, like they're not necessarily real estate professionals. They're professionals in their own mind and they're very successful in what they do. But as part of being a successful, individual, they're really good at reading other people and seeing through situations that may be inauthentic, whatever else it may be. So it's almost like you have to live every single day with the idea that, it's your reputation's on the line. And that's, whether it be in a deal, whether it be in, negotiating other terms, paying people on time, paying commissions, whatever it is, like if you can keep it consistent, I think that investors, kind of just shows through in your character.
Absolutely. Have good values and live by them. Great rule of thumb for any professional, any person.
Yeah.
Really.
And it just seems like capital raising is like the most like raw way of doing that, right? To have someone separate with their capital is a big ask.
Yeah, absolutely.
And people don't hide around that. Like it gets really authentic really quick.
Yeah. That's awesome. So, speaking of capital, Alakai Capital, where does that come into the picture? So, you've done your first couple of deals. When did you get that aha moment that's like, okay, I can create this business and really build something? Was there a single impetus, or is it just a natural progression of you building this portfolio with this group of investors? I'd love to hear kind of where that spark came from.
Yeah, there are really two aha moments. So the
Mm-hmm.
first one is when you get to the point that you understand that investors want to work with you. They trust your skills, your expertise, and it really is motivating. It gives you some confidence to know, hey, I'm really going to push in this direction. And that's kind of one of your front doors as any sort of syndicator or capital raiser. You have to have your people on board that trust you, and then you have to deliver those returns.
Mm-hmm.
The whole other front door, at least in my business, is my tenant and broker relationships. And so, concurrently with that, I was constantly been, working with brokers and tenants over my career, and really focus on delivering as good of an experience as I can for them. Whether that experience be, smooth transactions with brokers where I just make it as seamless as possible. With tenants, being a great landlord where things come up, we address them quickly, we're communicative with them.
Mm-hmm.
And when I started to see brokers and tenants reaching out to us and telling us, hey, we want to be in this market, or we want to work, with Alakai Capital, that's really when it dawned on me that we're providing a service that other people are really enjoying,
Mm-hmm.
and obviously we love doing it. And so when both of those kind of clicked, and we had the capital on the back end supporting us, as well as the brokers and the tenants on the front end saying we want to continue to work with you, that's where it felt like, geez, now we have something that we got to maintain it, but let's really try to ramp this thing up and see how far we can take it.
Absolutely. So, kind of, you know, building on that again, your background isn't traditional of investors or brokers in the real estate space. Professional sports. You touched on this a little bit, um, but coming from that sports background, specifically in the world of kind of entrepreneurship. You could have gone to any firm and just been like, "Hey, here are my ideas. Let's do these deals." You started your own company. So, I'm curious, how do you feel that your experience in sports or otherwise has been an advantage to you as you build your own firm and build up your own portfolio? And I'm curious, do you think there's any place where there's maybe been some disadvantages that you've had to overcome?
Yeah, sure. So yeah, I mean, sports are interesting, especially non-team sports.
Mhm.
Wakeboarding, you have teams, but they're kind of competing against you in every contest. And everyone has those competitive juices, so you're always excited for your friends and buddies to be learning new tricks, but it just pushes you because every new trick they learn, they're bringing that to the contest where they're competing against you, and then it's gloves off, right? It's every man for himself.
Yeah.
So from an entrepreneurship perspective, that kind of teaches you early on that you can rely on yourself, and you got to continue to push through. And when you're starting your own business, there are still times where it is a real challenge. You just don't think that there is a path forward, and you have to step back and trust in yourself and continue to push through.
Hmm.
And a lot of times, it's like you're walking through the forest is one of the analogies I always think about, where you can't see what's ahead of you, but as long as you keep on moving, you'll be able to see the path forward more than the individual that stopped.
Hmm.
And so it's just a lot of trust, knowing that you're going to continue to push and get there. So
Yeah.
that's probably one of the bigger things you get with sports going through it. It's been a challenge from certain aspects because it took me until later in my career, at least at this point, to really start to value the benefit that having a team brings into play.
Mm.
It's been the last 4 years I've started to grow the team, and I can tell you it's almost like a phase two of this journey,
Yeah.
where it's been absolutely amazing. I mean, the impact of having great people around, the scope of work you can do and the quality of work you can do is hard to ever over exaggerate.
Mm.
So I think I was kind of slow to that because, in your sport, you kind of learn, hey, I'm gonna do it on my own. I can do it on my own. I can trust that I can get it done. And so that works to a certain point.
Yeah.
But then it's just kind of like you're putting lighter fluid on everything once you get good people around you.
Absolutely. Yeah, and that kind of is a really great segue for our second topic, which is, just the more practical, tactical aspects of growing and scaling a business such as yours. So over the last 20 years, you've acquired, I think it said over 70 properties, 800,000 square feet in your portfolio, which is crazy. So I'm curious, you had the real estate experience from your first few years from schooling. From working with other brokers and other developers. But how did you in the beginning and maybe even later on as you started building out more of the team think about scaling the business itself? Managing people, how did you think about hiring the right people? How did you think about building in like systems and processes all the while you're doing these deals? I'm curious like what was your mindset and what are some things you learned from that journey?
Yeah, this is like the journey I'm in right now. It is really different. It's challenging. When when
Yeah.
you're in real estate, and I think a lot of people in real estate think that we're in, a unique business, or at least the people I talk to
Mhm.
have thought that, right? That like what we do is just different than most others. So when you're good at acquiring real estate and developing real estate, you think you're good at being an entrepreneur. And then you start to
Mm.
hire people and you realize, holy crap, I do not know much about being an entrepreneur at all. And so it's been almost like a relearning of what being a business owner is completely since I started to bring on people. Because all of a sudden, you're caring about mentorship, structures, SOPs, all these different processes so you can scale your time and energy across an organization while maintaining the culture and allowing people to be their own leaders and grow within their roles. So it's been a significant learning journey that I'm still knee deep in right now. I
Yeah.
think one of the biggest things that really allowed me to kind of change my lens on it was I joined this group called EO, which is Entrepreneurship Organization, and it's this worldwide group of people that have started their own businesses, and you get together and everyone talks about their business issues, issues whether it be hiring, mentoring, structure, payroll, whatever it may be. And so when I
As
first joined,
simple as
I
payroll.
as simple as that. I mean, but
Yeah.
everything seems to be somewhat of a challenge. And
Yeah, yeah.
so when I first got in, I kept on saying, okay, well, my business is different because X, Y, Z. And luckily, the people around me were still are, awesome people, awesome business owners, and they really got me to learn like your input is real estate, and that's it. Like that's where it stops right there. Like you have a business, and your widget is real estate.
Hmm.
And once I started to look at it like that, and then it's just like every other business, all of a sudden everything I learned about business like throughout my life kind of flushed back in.
Mhm.
And you start to think differently about, it's not just about the deal, but it's about, okay, how do you want your company culture to look? How do you want your branding to be interpreted by, the people that are looking at it?
Mhm.
How do you want to structure your little things, even like your holiday schedule or like your celebrations when you close deals,
Yeah.
your various, like I said, your processes. It turns into a lot of whole new things you're thinking about, which is challenging because it pulls you away from the deal. So it's kind of
Mhm.
like people say, you have to slow down in order to get faster.
Mm.
And when you're actually in the middle of it, you really start to understand what they mean by that. Because you do have to kind of step back and make sure you're doing things right. So then you have a whole team that can push forward and really start to push the gas down.
Absolutely. Yeah, I have two questions that I want to kind of branch out from that with. So the first is I'd love to hear an example of things that have worked, processes, SOPs, whatever, things that you were able to set up pretty effectively from the get go and why you think they work. uh, a process you maybe set up that didn't work that you had to correct and kind of how you realized it wasn't working and how you pivoted. And then the other corner, which I can ask again because I'm dumping a lot on you right now, is I'm curious to what extent you learning more about entrepreneurship and building a business has actually helped you improve as an investor in commercial real estate? And feel free to tackle any of those in any order you want.
Yeah, you may have to ask me one of those again or two of those again.
No worries. I wanted to say it all so I would remember.
Perfect, perfect. So the one that I'm enjoying right now is, we put together a very thorough process for acquisitions.
Mm,
And it's everything from the way that we negotiate with the seller, how we communicate with the brokers through our underwriting process. What are the key things we got to look for in due diligence? And a lot of them aren't applicable to every single job. But one of the risks you have with real estate is just not knowing what you don't know. And so if you're going through every single possible solution or barrier that could happen for a property and you just click it off because it's not applicable, that's a heck of a lot better than just not going to it because it doesn't seem like it would apply to this property.
mm,
So then it goes past that into communicating with our asset management team. When we're going hard on our deposit, okay, here's what we have coming down the pipeline. So they're able to start building out what our CAMs are going to look like, start to get the tenant relationship and connections going. And then even after closing, then it rolls into our accounting team and then our marketing team as well. And
mm.
so this kind of overall process makes it so that when we're jumping on a property and acquisitions, like we want to keep our heads down and focus on acquiring the property, negotiating the leases, working out the development contracts, whatever it may be. And that just allows the rest of the team to kind of absorb it into the portfolio. So when we do close, there's no like last minute, alarms or anything like that. And then it rolls all the way, like I said, into marketing. So then we can tell people, hey, we just, bought this exciting deal where, hopefully someone will see it and they'll have something similar and want to share it with us.
Yeah.
So that was
Yeah.
really cool to put that together. Because, it just kind of brought the whole team together into like one sync. Everyone kind of just flows and steps up when they need to step up.
Yeah.
So as far
Love
as challenging processes, or ones that haven't worked, we've really started to use, different software tools for project management and just, I guess, knowledge management.
that. Hmm.
So the two that we're really high on right now is Asana for project management, which is like a Monday.com.
Yep. Yep.
It's not
We
real
use
estate
Asana.
related. Okay, yeah, yeah.
Yeah.
It's once you're on it, you can't imagine not being on it.
Yeah. It's quite robust.
So it's it's very robust, yeah. But it's we love that detail.
Hmm.
And then, we use Notion as well to kind of, track our thoughts and keep everyone kind of on the same page as far as, brain drain per se.
Yeah.
So those have been really good as well as, keeping our SOPs and everything intact. Before that, we would create these SOPs that I think were really, really good. And we'd have them on like Word documents or PDFs.
Mm.
We'd package it up. The whole team would say, this is awesome. Let's roll with it. And then they'd go sit in like a folder somewhere. And so
Yeah.
we'd have like a mistake and we'd say, okay, great. Like, where did we mess up on the SOP? And people would be like, wait a minute, where's the SOP saved again? And so
Yeah.
we started to realize like, geez, how are we, spending all this time creating these processes, but then it's just so inefficient, accessing them or just
Yeah.
annoying, right? You don't want it to create friction for people.
Sure.
So, we went down the path of saying, how can we make it less friction, which is how we found, Asana and Notion. And, I'd say that was kind of the biggest issue is just, you create these processes, but then you also want people to want to use them. You want it to make
Yeah.
their lives easier, not harder.
Yeah. Yeah. I think that's a really wonderful point you make because a lot of people will get either, distracted by the shiny new technology or really wrapped up in like the security that something like a very structured SOP will offer, but you have to approach it from the what is this, what purpose does this serve? Is this easy? Is it going to actually make the people who need to follow it better at what they're doing? Because if not, you will find out really quickly that it is not not effective, not a good tool. So
Yeah.
yeah, I appreciate you pointing that out.
Yeah. I mean, employees are really good at letting you know if things work or not, because if they don't, they just won't do them.
Yes. Yep. 100%. And good thing you built in that feedback loop too, so you could realize pretty quickly that it didn't work.
Yeah. And there was a book I read like 2 years ago. I think it was called The Checklist Manifesto that Tim Ferriss recommended reading.
Love Tim.
And it was a book about like airplane pilots, how they have all these checklists. And it's not because, these pilots don't know their job and don't know what to do. It just makes it so they can focus on their high level thoughts rather than just like making sure that they, fly the plane correctly.
Yeah.
And once you think of a checklist from that perspective, where it's not like someone assuming that you don't know how to do it. It's really just an aid, so then you can focus on the higher level type thoughts.
Yeah.
It kind of like opened up the way that we started to think about it. So now we have these various SOPs and checklists just so that people can really focus on the harder challenges they have each day rather than just the mundane things that they're repetitively doing.
Yeah. Freeing up the brain space.
Yeah, exactly.
Awesome. So I'm very curious, to what extent, you mentioned working really closely with brokers kind of in the early days of Alakai. I'm pivoting a little bit more to the deal process than the
Yeah.
business building process. Um, to what extent do relationships with brokers play a key role in your investment strategy so far? And how do you think about building and fostering these long-term relationships? Like, is there anything Alakai does in particular? Is it more like you and your team, more on a personal level? I'm curious how you prioritize those while still actively going through like acquisitions.
Yeah, so brokers are a huge part
Mm,
of our business strategy. And maybe it's because I came from brokerage where I saw the value that a broker that is really good at their business can create for a developer.
mm,
At this point, we almost look at them as like teammates with us,
mm,
where every deal that we have a broker, they will know the market as good most of the time, almost all the time, better than us. They spend all day negotiating, where we're spending part of the day negotiating, part of the day, understand our impact fees, talking to our general contractors about construction issues. We're all over the place.
mm,
And so, these guys are on the front line. So they're just hard not to want to understand and use their knowledge to get our deals done. And the great part is they're as motivated as we are to get the deal done as well. So the payback system is really, really strong in the way that the industry is, organized.
mm,
So, whether it be on the acquisitions, the brokers know kind of what's going on throughout the market. If we're negotiating with tenants, they've probably negotiated way more leases than I have. So they know like the little triggers we can pull based on what our end investment strategy is.
mm.
And, so I can't say I can't say enough about how much they help us with our expansion.
Yeah.
And for that to be the case, obviously, we have to really respect the relationships. And the
Mm,
biggest way that I've seen to respect them is just complete, transparency and honesty
mm,
and confidentiality. So when we're talking to guys, a lot of times information is moving so quick. You can't have agreements signed, um, the proper things put in place for confidentiality. So it's really got to be based on just knowing that whoever you're talking to, they're not going to talk to anyone else about it, and they're going to protect you in the situation, even if it's somewhat questionable. And we've had times we've had to pay, two brokers on a deal where, it was off market and then another guy we knew got it and then shared it with us. And it was kind of like, well, who's involved?
mm.
But, that was one deal. And most of these guys that I work with, I've done dozens of deals with.
Yeah.
And so, we see it as just a part of the equation, move on and, continue to push through.
Mm,
So, we cultivate those relationships through just, hopefully being easy to work with. Like I said, the confidentiality and,
yeah.
being really trusting. We also try to have fun with them. I kind of grew up in the space with a lot of guys I work with.
Mm.
So, we go on a ski trip every single year. We
Fun.
like to play like paddle and, tennis and some of these other sports.
Yeah.
We spend a lot of time working and negotiating. And sometimes, it honestly gets, pretty hairy in some of those negotiations. And so you got
Mm,
to remember that, hey, this is the work part of it, but let's go and, let's get competitive out on the tennis court
yeah.
and, see where we can really settle the score.
I was gonna say how many pickleball matches have decided which direction a deal's going. I'm
Oh,
sure
more
that's
than I want
probably
to
the
say.
case.
Unfortunately, I'm not that good at pickleball.
I'm not either. I'm not either. My friend is obsessed with it. He started teaching now, actually, which is very funny to me. I love
Wow.
it. So speaking of brokerage, I'd love to get more into all the different asset classes you're working in from an investment perspective. You've done retail, you've done medical office, industrial. It's a huge swath of different asset types. What do they all have in common from an investment thesis perspective for you? How do you approach a new potential acquisition? What things do you look for? Um, What's the reason for diversifying so much based on your experience? I'd love to kind of get a little peek behind the curtain there.
Yeah, I mean, we're constantly just underwriting risk, and that's really what our job comes down to. Is if we can try to understand as much of it as possible, and create bumpers around those risks. I mean, you'll never know everything, um, but hopefully the big ones you can identify with each deal.
Mm-hmm.
So with each deal individually, we just try to say, okay, how do these risk parameters compare to other deals we've worked on? How does it compare to our comfort level of, whatever the deal may look like? And then are the risk parameters to the point where we can, you know, not guarantee, but, we can almost, there's a better chance of an upside return relative to downside risk.
Mm-hmm.
So very asymmetrical type risk.
Mm.
So if there's a deal that we could lose everything on, we definitely have to underwrite that very differently.
Mm.
And when we look at different deals, we'll definitely pivot in different directions based on our relationships.
Mm.
So for example, we mainly focus in the state of Florida, but if there's a great tenant that, we have a relationship with, we're developing a preschool out in California because of a tenant
Cool.
relationship.
Very
We've bought
cool.
preschools and
Yeah.
repositioned them up in, Seattle because we just had a great tenant that we knew was going into it as a partner with us.
Mm-hmm.
So that was one of the big variables that we were able to take away, one of the big risk factors.
Yeah.
So we'll look at that, and also if there's geographical areas that we're comfortable with, whether there's high barriers to entry or it's somewhere that we've just known from other deals in the past, we'll feel more comfortable with our risk profile going in that direction.
Mm.
So all the deals are can be slightly different. It may seem like there's a wide divergence of it,
Mm.
but when we kind of narrow it down to what are the risk factors relative to our return,
Mm-hmm.
they start to all kind of they're not necessarily similar, but they all rhyme.
Yeah. You have your checklist.
We have our checklist.
So
We
to
have our
speak.
checklist.
Yeah, yeah. No, totally makes sense. And I'm curious, you mentioned underwriting risk is like the main thing you guys do. Has your approach to risk or risk tolerance changed in the years that you've been in commercial real estate? And how so and why do you think that is?
We are definitely more stringent on underwriting risk today than we were a few years ago.
Hmm.
And it wasn't that a
Understandably.
few years ago. Yeah, I mean it's a very different world right now. There's a lot of potential risks out there with like social unrest, inflation, some of the international situations going on right now.
Hmm.
That real estate, although it's localized with how connected the world is, anything that happens overseas can affect our investments tomorrow.
Mm-hmm.
And so there's deal risk, but there's also larger macroeconomic risk
Mm-hmm.
that we cannot be naive to because we're investing in a pretty illiquid asset. So our scope of risk that we look at has definitely changed. It's broadened quite a bit to the things outside of real estate.
Mm-hmm.
Within real estate, I'd say the biggest thing is we just really try to understand the qualification of the cash flows that we will be experiencing with our projects.
Sure.
And so, being in industrial and retail, we're 100% tenant driven, and our tenants, have everything from, 3-year to 20-year leases. And so understanding our tenants, their business model, the individuals behind them is becoming more and more important as, part of our underwriting variability. And a lot of what we do, are local, mom and pop, blue collar type tenants. And so it's very different underwriting them than, like a Chipotle.
Mm-hmm.
And so those you kind of understand, the person, their business, their, past history. And, our property management and asset management team that are in house, like they do a lot as well because they build those relationships.
Yeah.
And I can tell you when, we experienced COVID, those are the guys that continue to pay rent. They had like, there's this pride to paying rent through that time period where we had national tenants that, their attorney said, hey guys, we don't know what's going to happen. Don't pay rent. Hold off. If the world ends, you'll be glad you didn't. If the world comes back, we'll pay rent. We'll be fine. And that was a challenging time as a landlord. And so to see that divergence, in the idea of credit, was fascinating. It definitely changed the way we underwrite, our tenants.
Yeah. Again, it's about relationships, um, so kind of speaking to that risk element, we touched on macroeconomics a bit. I'd love to kind of pivot more into the commercial real estate market as you see it today. You mentioned you focus primarily on Florida, though you do dabble in other markets depending on that tenant
Mhm.
relationship again. So, you know, you went to school in Florida. It makes sense that you would set up shop there. But what about Florida keeps it as kind of like your core market focus? And in the last few years, how have you seen the market shift in your state? And kind of what are you keeping the closest eyes on?
Florida is a great market for investment for a few things. One of the things I don't think people talk about enough is just the amount of eyeballs that we have on the state and amount of people that are comfortable investing in Florida.
Mm,
So when we look at doing a new project here, and obviously as I mentioned before, we all know real estate's very illiquid. But if there was like a heat chart of liquidity within the United States for real estate, I mean
mhm.
Florida would be red hot.
So I
We have
gotta
buyers.
point out, I gotta show you
Okay,
a particular map on Crexi a little bit later because it actually has a heat map of of where buyers are looking, and I can attest Florida is red hot in terms of
good.
attention.
Okay, so
You're
we're
on
on
the
the
money
same
there.
page then.
Yeah, yeah.
Yeah, I mean, we have buyers that are from, every South American country, from California, New York, Europe. Our buyer pool is so large that
Mhm,
if you have an asset in Florida and you want to sell it, you have, a divergence of different people looking at it
mhm,
with very different motivations.
mhm,
So there can be a currency play coming out of a South American country that then we get a benefit from because they're comfortable investing in our state because they take
mhm,
their family to Miami or Disney.
mhm,
So that's really exciting for investing in the state. And there are other states, Texas is another big one as well that we're looking at right now that has a lot of that liquidity from various sources.
mhm,
But that's been a very attractive feature of Florida. Also, just the fact of Florida's landmass and the amount of development that continues to expand out. It's a lot easier to develop, greenfield type developments where there's, a couple hundred homes coming in that need retail services in front of them than, infill retail in Manhattan.
mhm.
So the ease of getting deals done in our state as well, because of that type of growth,
Yeah,
is really attractive to us. And a lot of the smaller markets that, 5 years ago people weren't talking about, now as the population continues to blossom,
yeah.
we're seeing all the national guys want to be in those locations, which is really exciting for us because it's, every single year kind of new levels unlock of, municipalities that people want to do deals in.
Yeah. Do you find that it's getting tougher to grab new properties then, as there's more attention being paid to the markets you're playing in?
It's becoming more challenging, but
Yeah.
there's also, I mean, there's a lot of opportunity in this state.
Hmm.
And there's a lot of opportunity for people that do good business that people want to work with.
Sure.
And so, I do think it's becoming more challenging, but also, as we continue to grow and hopefully our positive reputation grows,
Yeah.
we're starting to see a lot more opportunities.
Yeah. That makes sense. There's enough to go around still.
Yeah, I mean, Florida's a great state. We obviously have, and you can't talk about Florida without talking about, the climate risk that we're seeing. So there has been that issue recently. I mean, all coastal, U.S. is kind of feeling it to some extent.
Hmm.
Um, and that's an interesting thing that we're going to see roll out. And I don't really know how it's going to end. I mean, the coastal cities definitely have to think about construction differently.
Hmm.
And as we continue to build buildings, we have to be conscious of that because there are risks of flooding. Um, but I mean, I don't think many people are building low quality product out here.
Hmm.
And the insurance is increasing. Luckily, we have the population growth. We're having we're still seeing really strong sales for a lot of our retailers throughout the state. So it seems that they can absorb it.
Hmm.
And it's still hard to tell like what that's actually look like down the road because
Hmm.
when you look at the historic charts, it may have just been a few unlucky years, but I guess the future will tell.
Yeah, you can't really predict that much when it comes to climate change, unfortunately.
Yeah, we'll
Um,
try though.
yeah, we're doing our best.
Yeah.
So I'd love to zoom in on the different asset classes that you focus on in particular. Industrial's obviously been red hot. Maybe in the last year, there's a little bit more supply coming to market, so now demand is kind of slowing down a little bit. Retail's been really strong, but consumer spending is maybe not. I think the report's actually come out maybe during our conversation, the February retail report for the U.S. So I'm curious what you are seeing, and we can go into like medical office. We can go into QSR. I know on our prep call you mentioned working with dispensaries even. So kind of curious what you're seeing in each of the asset classes that you work with.
Yeah, I mean, we definitely, as I mentioned, focus on a few different ones.
Mm-hmm.
One that we haven't touched on yet is we've worked with quite a few of the dispensaries around the state of Florida, and that's been an exciting area because nowadays I think most landlords are comfortable with that use.
Mm-hmm.
When we started, people kind of looked at them as a four-letter word because it was federally illegal. There was still the mindset that, it's a gateway drug, although it is only medicinal within the state of Florida. So there's a lot of negative feedback around it. Yet the tenants were pretty professional. They were startups, so don't get me wrong on that, but they had strong business models. They are, they have to do seed to shop, so they have to grow it, manufacture it, distribute it, and sell it within the state.
Yeah.
So to say that these are, fly by night type operators we couldn't be further than, wrong on that.
Yeah.
And so we had a chance to really, a huge amount of capital, just a strong wherewithal of how to, grow this plant. I mean, it's a challenging plant to grow. So, we had the benefit of working with some really solid tenants early on and being able to expand across the state with them. And Florida being, as geographically large it is and diverse, that was a few years of a lot of fun, kind of doing these rollout plans.
Yeah.
There's quite a few in the state now. It's more of a mature market, so it's not quite what it used to be. There's still great tenants to work with, but they're not quite at saturation. But there are quite a few locations, in most of the major metropolitans across the state.
Yeah, I was just in Miami last week and saw actually quite a few dispensaries just driving from Miami to Fort Lauderdale. I was like, wow, this is crazy because I worked in the cannabis industry at Weed Maps, another tech company, back in like 2016, which was when Florida became medicinally legal, 2014, I think. So they were really just starting to ramp up with the consumer-facing side of their business. So I remember like working with Trulieve and all these different Florida tenants that you've worked with. It's crazy seeing how the market has changed in the last almost 10 years.
So was that a mapping system just to show people where the dispensaries are located?
It was basically like Yelp, but for cannabis.
That's great. So then could like Taco Bell advertise on that?
Old employers. But anyway, yeah, that's as you were saying.
So then we also, work with the more traditional retailers, and they're still expanding like crazy across Florida. It's transition to what they want. Most retailers right now want single tenant locations, drive-throughs. Ever since COVID, drive-throughs have been almost a requirement for groups that didn't, we wouldn't think would make sense before. So that's leading the way for a lot of new development, right? Because a lot of them are located in your more traditional strip centers, and so when their leases roll, they'll move right next door for a drive-through because they're seeing 40 to 50% sale increases.
Yeah.
So that spurs a lot of development, and you continue to see it, and then redevelopment within parts of the state. The industrial side's a little different because most of what we do is your more local mom and pop type tenants. It's all small bay, 1 to 10,000 square foot bays, and it is a lot more just blue collar. You understand the market dynamics. You see where the population growth is, where the manufacturing is happening, and you try to find your infill industrial parks. For us, it's 10,000 to 100,000 square foot parks. With these smaller tenants that really serve the local industry. And that's been an interesting investment because, one of the bigger factors on it has been inflation, which inflation is very bulky, or I guess bumpy. There are certain people that have rode the wave up, and then the property next door, they haven't experienced any of those inflationary pressures yet. And so that can create significant opportunities that I think a lot of these, small bay industrial guys are, that's what they're taking advantage of right now.
Mm.
So, we've really enjoyed that space. And, it's really hard to build that new stuff or build that smaller stuff new as well. I mean, a lot of what we're seeing are the larger big boxes because you can get such economies of scale,
Hmm.
where these smaller buildings are just, they're really challenging to get new out of the ground. So as long as you maintain them well, you can really find, a great long-term investment.
Absolutely. Yeah, it makes sense. I've heard nothing but excitement about small bay flex industrial lately. So you've got your finger on the pulse there. um,
That's a fun one.
yeah. Speaking of inflation, and we can bring in high interest rates too. Well, high interest rates, higher than they were certainly 5 years ago. Um, I'm kind of curious with these factors in mind and other macroeconomics. In what ways are you being opportunistic with your investment strategy? And in what ways are you maybe being a little more conservative or defensive? And what are your predictions for the next 5 to 10 years in your markets? How are they informing those operative decisions?
So inflation is, I mean, an exciting opportunity for the right properties, which are the ones with the shorter term leases,
Mm-hmm.
where you can start to take advantage of that.
Mm-hmm.
On the flip side, a lot of the developments we do, we need 15 to 20-year leases. And so, when you lock in rates for that long, it can be a challenge when you're in inflationary environments because it can far outpace, the rental rate growth that you're seeing. And most of the time it does at this point. So we're taking advantage of it with our, strip center and small bay industrial type investments,
Mm-hmm.
where we're buying product that just hasn't seen those inflationary pressures, and you're seeing areas where industrial rents are higher than retail rents on the buildings right next door, which is crazy for us to imagine because of the income differentials between your retail and your industrial tenants. So there's a lot of opportunity in that space where you're just finding underutilized assets. A lot of times we'll mix that with a refresher, whether it be updating the facade or just cleaning up the grounds or adding another building to the park,
Mm-hmm.
where then you can start to push rents and you just kind of get a little bump from the inflationary pressure as well.
Mm-hmm.
It can be challenging though because a lot of tenants, although they haven't experienced inflation, they haven't even passed it along to their customers. So if you're coming in and asking for a higher rent number, it's not that they're just pocketing the difference because they've raised all their pricing. Sometimes they haven't seen that either. So now they have to go to their customers
Yeah.
and increase their pricing to them. And if it's B2B, then the next customer is finally increasing it to the consumer. So, there's a lot of pockets where we still haven't experienced inflation. So although, it's starting to settle down, it's definitely kind of lopsided at times.
Mm-hmm.
So that's, where we're seeing the benefits of it. Obviously, the challenges of inflation come with the interest rates. And today's interest rates are a challenge because, obviously people underwrote deals not expecting us to be in this environment today.
Mm-hmm.
When you look at the historic norm, you could say that we're not that high. When you look at the historic norm for probably most guys in their career, we're pretty darn high.
Yeah.
So
Yeah.
it's definitely something that we need to get used to. And, unfortunately, I don't necessarily think it's going to change much. We could see a dip if, we're able to settle down. But, we do have a lot of tariff talk out there. And we're kind of seeing it on some of our, construction costs already that would lean us in the other direction.
Mm-hmm.
So, I don't necessarily think we're going to see interest rates drop quite a bit. But, we could see 100 basis points, start to calm down and revert more towards like the mean.
Yeah.
With our investments, obviously we're underwriting different exit cap rates. We're having to underwrite different going in cap rates. So you have to be a lot more disciplined on your underwriting, and you have to be a lot more honest with your exit. I mean, if you're underwriting deals right now with an exit based on interest rates dropping, I just don't know if just doesn't sound like a good plan.
Yeah. Yeah. You gotta be, comes back to honesty, right? Honesty with who you're working with, honesty with yourself. Totally makes
Yeah,
sense.
and with inflation, dropping and then interest rates dropping, in most scenarios, if interest rates drop, it's because the economy is slowing so much that we're wanting to, kind of push up the steam.
Yeah.
So, myself and probably most landlords out there, like we don't want to go into recession.
Yeah.
So if I had to pick between a slower economy and lower interest rates, or keeping interest rates kind of where they are, but keeping the economy pushing, that's a hard decision to make. I'd probably want to keep them higher and keep the economy moving, in a
Yeah.
positive direction.
Uh, I was in conversation with somebody last week at this conference, and they were like, some money or maybe less money than you thought you were going to get is definitely better than $0. So, or losing money. So,
Yeah,
yep,
that sounds like a
totally.
developer.
As a broker, actually. Real
Okay,
estate
okay,
broker. Yeah. Very no nonsense broker. Um,
probably a very good broker.
yeah, no, she's fantastic. But yeah, I mean, this is a really wonderful overview. I really appreciate you sharing kind of your thesis where you're seeing things going over the next couple of years. I want to be mindful of our time because we've been going pretty strong for a while now. But I have a couple rapid fire questions for you if you're ready. Quick, like
Okay,
fast answers. It's a lot of fun, I promise.
let's do it.
If you were handed 50 million today and had to invest it immediately, where would you park the money and why?
Small bay industrial because of inflationary pressures, as I mentioned.
Easy peasy. We love that.
Easy.
What is the oddest or craziest way that you found a new deal?
I had a chandelier installed in my industrial condo that I had. The gentleman installing it was telling me about how he was about to be fired from his job because his owner was selling the building that they were in. And when he was done installing it, I drove down to the building because I knew exactly which building it was. Went in to talk to the owner, put it under contract, and bought it 45 days later.
That's amazing. That's a great story. I was not expecting anything like that at all.
Yeah, it was pretty wild.
Um, what is your favorite tool that you use on the job? It could be software. I think you mentioned Notion earlier. It could be a manual tool. What's the thing that's come most in handy for you over the years?
I would say my standing desk.
Oh, I love my
I
standing
love
desk.
standing at the desk. Our whole team has it, and it just the energy you feel around the office is just very different when everyone's kind of alert and ready to go.
Love that. Yeah, staying
Yeah,
active.
staying active.
And then finally, what is the most common misconception that you've encountered about your job or commercial real estate at large?
That it's more socializing and network than the foundation of knowledge. I think
Hmm.
that the networking can get you so far, but the individuals I see really excel have struck such a strong foundation of knowledge that they've built over time. And there's your 20s and almost across the whole industry is hard work.
Hmm.
But if you put it through, then in your 30s and 40s, then that network really starts to take effect. And that's what really people see. They see like the tip of the iceberg and they don't see kind of the hard work that most people I see excel put in, earlier on.
Absolutely. If you come up to bat and you don't know how to swing, it's gonna be very, very awkward conversations a little bit later.
Perfect analogy, exactly.
Awesome. Awesome. Well, Nick, thank you so much for sitting down with us. This has been such a blast. Where can people connect with you if they want to get in touch, learn more about Alakai, connect with you, give it to us?
So you can go to our website.
Hmm.
It's www.alakai, which is ALAKAI capital.com.
Hmm.
And so on the website, I have, my LinkedIn, my email, my team's LinkedIn, their emails. There's a button if you want to learn about, our investments. We syndicate each one of our deals. If you just want to send us a contact, you can do it on our contact page. But you can get a hold of us anywhere there. Also, I'm pretty active on LinkedIn, so you can find me on LinkedIn as well.
Fantastic.
Always down to talk about real estate.
Yeah, it's been so much fun. Really, really appreciate you coming on.
Thank you. This has been a blast.
Yeah. And thank you, everyone who tuned in today. If you enjoyed this episode, please don't miss the next one. Visit crexi.com/podcast and sign up to get the next episode delivered straight to your inbox. You can also go to YouTube, just type in Crexi in the search bar and see all the video recordings of each episode. And don't forget to subscribe to the podcast on your favorite podcast app. Take care and be sure to tune in next time.